Scotiabank, the first big Canadian bank to report earnings this week. The company beat in profit after announcing layoffs in October. Denis Taillefer is portfolio manager at Caldwell Investment and joins us now to talk about the latest quarter. Thanks for joining us today. A strong quarter for wealth management for Scotiabank. Has this been a focus for the bank?
You know, it has been a focus for the bank. So they're really trying to, grow that business, grow that fee business. So it's a capital light type business, which will really help drive better ROEs on a go-forward basis. So they did very well in that segment. Having said that, I think the market's expecting all the banks to do very well in their capital markets division because we've seen very high levels of trading. We've seen a lot more deals happening. And as well, the assets under management, we've had really good markets over the last few years. So the assets under management have grown just along with the market. So your fee based on that asset base keeps growing as well. So it was expected, and it is expected for all the banks. It's a little hard to kind of split up how much of it has to do with the initiatives the company has taken and just the overall market. But over time, I think we'll be able to compare how they're doing versus their peers and how they're doing over time and how that part of their business keeps growing, because that will be a big driver of them improving their ROE over time.
Going into the end of the year, how has Scotiabank performed compared to the other big banks?
So, if you look at Scotiabank's performance over the longer term, like 5 years, they've really underperformed the other banks quite significantly. But over the last 2 years, so they had their investor day on December 13th of 2023. And from that point on, they've pretty much well been in line with the overall banking index in Canada. So they've basically kept pace with the rest of the banks as they're basically kind of executing on their plan to kind of reposition their businesses, both in the South America or the Latin American part of their business, as well as their North American and Canadian businesses. So they've been executing fairly well, and they've been able to keep pace with the banks. Having said that, they still trade at a discount to the overall banks. But we think if they can continue performing that way, they will be able to close some of that gap.
What does their mortgage portfolio look like at this time?
So the mortgage portfolio, interestingly enough, they spoke to it on the call. They did see some weakness in certain pockets of the market. So the Greater Toronto market, as well the Greater Vancouver area market, have been under pressure. So they've seen a slightly higher delinquencies in the mortgage book there. Having said that, nothing too alarming. And it's been also a little more focused on the condo markets in each market. Overall, their loan book is very, I'd say very strong, very high quality. So about 94% of the loan book is secured. They've got very low loan to asset values on that loan book, and their FICO scores are very high. So there's no real big concern there, but they did point out that they've seen some weakness in a few of the pockets of the market that they deal in.
Denny, they laid off more than, I think, 2,000 people, close to 2,500 recently. What kind of charge are they taking connected to those layoffs?
So yeah, they're taking I can't remember the number now, but I think it's a fairly significant charge. We expect to see that over time with the banks. There's going to be a lot of investments in technology, and we will see, obviously, that will drive productivity and so forth, and that will have two impacts. One, I think they'll really slow down the hiring in a lot of their departments, but as well, we'll probably see a lot of people retiring and not hiring back so quickly, and then a mix of layoffs here and there. So over time, we expect to see more of that. And that will just help really drive the cost portion of running the business lower. And we think that will be a big driver to earnings growth for most of the banks on a go-forward basis here.
Okay, so where does this bank have potential for growth? You mentioned, or we started talking about the fact that wealth management is big for them. That has grown significantly. Clearly, the year they've had has benefited them for capital markets. But where could they grow?
So the international business as well, they've kind of repositioned the portfolio there. So the Latin American business is now much more focused on Mexico, Peru, and Chile. So basically, they've got a strategy there where they're going to really focus on the higher value type clients, where they can really cross-sell and drive a lot more value with their client base. The U.S. is probably another big leg opportunity for Scotiabank. They're probably underrepresented there. They do want to be the Bank of the Americas, so they're going to have to straighten that or create or grow more scale in that market. They spoke to, they were asked about M&A on the call. It doesn't seem to be a focus today, but I have to think down the road, M&A will become a bigger part of the story, and the U.S. market will probably become a bigger part of the growth story for Bank of Nova Scotia.
All right, Denis Taillefer, we'll leave it there. Thank you for joining us today. Appreciate it.
Thanks for having me.